All right, let's dive into a huge shift that's happening in crypto right now. We're going to break down the new global crypto regulation report from PwC, because by 2026, the entire landscape is going to look completely different. The rules of the game are literally being rewritten as we speak.
You know, for years, crypto has felt like the Wild West, right? But according to Matt Blumenfield at PwC, we've just crossed a major threshold. Regulation isn't the enemy anymore. In fact, it's becoming the very foundation for crypto's next massive wave of growth.
And let's be clear, this isn't about another hype cycle or some crazy price surge. No, the real story here is something much, much bigger. It's about a fundamental rewiring of the entire financial system.
Okay, so let's get into it. To really understand what's going on, we first have to ask, who's actually in charge here? Who's driving this new reality?
Well, here's the surprising part. It's not the regulators. The PwC report makes it crystal clear that for the first time, the market itself, how people and businesses are actually using crypto in the real world, is in the driver's seat. Regulation is now playing catch-up. It's responding to the market, not leading it.
So what's pushing this change? The report boils it down to 4 key market forces. First, crypto is now being integrated into the actual monetary system. We're talking payments, settlements, the whole shebang. Second, the big institutions, the banks, they are all in. There's no going back. Third, the tech itself is just getting way better, more mature, and more secure. And finally, and this is really cool, crypto is being adapted to solve unique, local problems all over the world.
So, with the market moving this fast, how are regulators responding? Well, they're basically trying to build a brand new operating system for finance.
And what's fascinating is that this new rulebook kind of has a split personality. On a global level, pretty much everyone agrees on the big principles. Stablecoins need to be fully backed, you have to keep customer assets separate, and you need strong rules against money laundering and terrorism financing. That's the AML-CFT part. But then you zoom in to the local level, and it's a total patchwork. Who gets to issue stablecoins? What kind of assets can back them? How fast you have to get your money out? It's different everywhere.
So what does this mean for the companies building in this space? It means the game has completely changed. The winners aren't going to be the ones who try to run from regulation. As Elise Susie Watts puts it, success is all about mastering it, building things that are tough enough to meet all these different local rules, but still flexible enough to work on a global scale.
Now, at the very heart of this new regulated world, there is one specific type of digital asset that's acting like the railroad tracks for this entire new economy. And I'm talking, of course, about stablecoins. And just as a quick refresher, a stablecoin is pretty simple. It's a crypto asset that's designed to hold a stable value, usually pegged one-to-one to a currency like the US dollar. Think of them as the crucial bridge that connects the old traditional financial world to the new digital one.
And here's why they are so important. This isn't just about trading anymore. Stablecoins are becoming the invisible engine, the plumbing for real economic activity. They're powering corporate finance, cross-border payments, often without you, the end user, even knowing that they're there.
So with these clear rules for stablecoins starting to form, a really fascinating dynamic is popping up. It's a brand new strategy that's forcing old rivals, I'm talking big banks and scrappy fintech startups, to actually work together.
And this is a really crucial point. Regulators could have decided to create a government-run monopoly on digital money, but they didn't. Instead, by giving the green light to privately issued stablecoins, they're creating a level playing field where both the old guard and the new innovators can compete.
This creates a strategy the report calls co-opetition. It's this mashup of cooperation and competition. It happens in 3 stages. First, the regulations create trust. Then, the rivals actually cooperate to build the shared roads and bridges. And finally, once those rails are built, it's a free-for-all to compete on who can build the best products and services on top of it.
And don't just take my word for it. As Dante Disparte from Circle says, this shared, safe infrastructure is the very thing that's going to let the whole ecosystem grow and grow safely. It's the runway for some massive but responsible innovation.
Okay, now let's explore what is maybe the biggest consequence of this whole thing, how this is fundamentally rewriting the future of the world's most important currency, the US dollar.
Check out this number, 95%. Over 95% of all stablecoin value in the world is pegged to the US dollar. So let's be honest, when we talk about stablecoins today, we are overwhelmingly talking about the dollar finding a powerful, new digital life.
And this changes everything. This transforms the dollar from being a passive asset that just sits in a bank vault to being an active network. It's going from something you can only get through a bank to something anyone can access with a digital wallet. The dollar's influence is now spreading through technology, not just policy. So why does that matter so much? Well, think about it. For billions of people in countries with unstable currencies or who can't even get a bank account, a stablecoin wallet is basically becoming a digital dollar account. The dollar is now reaching places and people it never ever could before. And this leaves us with one final huge question. The future of money is being written in code, right now, as we speak. The debate isn't about if the dollar will be digital anymore. That ship has sailed. The real question, the one that matters now, is who gets to write the rules that govern its